Okay, I want to do a real quick video on what for new people, new to the forum, new to Doe, new to Tasty Trade, as well as what I'm looking out for tomorrow morning. Um, Basically, tomorrow morning, or actually what I do on a daily basis is, and depending on your capital, I like to look for anything with um, right here, IB rank in a stock greater than or equal to 50%, which we saw a lot of yesterday that don't have earnings, of course. IB rank greater than or equal to 35% if it's an ETF. And I want to look to collect at least 19.8% of the expected move. Okay. Now, the reason why the Golden Gecko has been confirmed that this just works over and over again and why I'm picky, I'd rather dump a whole bunch of money into high probability trades than just trade rather than just trade to trade. So on the form, if you go here, you click on these My Favorite Slides, and these are all the study material that the research team has done on Tasty Trade that backs up my philosophy on why it works. In fact, the last 2 days of market measures were great. You might want to check that out. But these are the ones I that remind me on why this works. There's a mega strangle study. It shows if you click on this slide right here, it'll show you when you sell something in high IV greater than 50% and you manage your winners at 50%. Look at your P&L winners, number of winners, 68 out of 73. That's a 93% win rate. It's hard to ignore that. Okay, and that's what these golden geckos are. Um, Here's one for the ETFs. Here's one I keep up all the time. Um, if you do a one standard deviation strangle, which is basically a golden gecko, collecting over 19.8% of the expected move, and IB rank is above 50, your win rate was 93%. Okay, so that's just unbelievable. Um, they also did one here for ETFs. If they did the same test using an IB rank of 35%, and here's what happened. Right over here. IB rank above 35%, collecting 19.8% of the expected move, 84% win rate. Okay, here's your P&L. And by the way, this is not even managing your winners at 50%. This is holding to expiration. So if you manage your winners, I expect that to be in the 90s, 90%. Also, okay, optimizing and redeployment. This is one I print up. So what I mean, look, here's how you can tell how you're doing, like your scorecard. Let's say you sell something with 45 days left to expiration, and now there's only 35 days left to expiration. That means you've held it for 10 days, right? Because 45 minus 10 is 35 days. Okay, let's say you're up let's say you're up 30% of max profit. Okay, you're right on target. What if though, let's say only 10 days into the trade, so you put it on at 45 days to expiration, and now there's only 35 days left, and let's say you're already at 50% max profit. You're ahead of where you're supposed to be, right? Because usually on average 19 days into the trade is when you'll be at 50% of max profit. So all you got to do is keep track of how many more days left. So take, if you're doing 45 days expiration, 45 minus 19, that'll give you the remaining number of days in Doe. It'll tell you, and you can make sure you're on track, and you know if you take off the position or not. Okay, so let's say you're 10 days into the trade and you're only at 20% of max profit. You know to hold it. Okay, hold it, because that's a real good side. I have this one taped out and taped up to in front of my desk, or in my laptop or whatever. Um, these are different time frame as well. See, there's one that was for 45 days. Here's one for 30 days expiration. It's the same chart, and I have one for 60 days right here. Okay, so you can tell, hey, am I ahead of schedule or whatnot? All right. Um, oh, if you want to do more trades, let's say you have a lot of capital and you don't mind, putting on more trades because you have the capital. Here's what you should be looking at. Okay, if you pick a stock or any underlying and its IB rank is 0 to 24, you should be selling a 2 standard deviation strangle. Okay, and look what happened every time they did this. Okay, for example, if the IB rank was between here and here, here's what they sold. Okay, which is even a wider golden gecko. If the IB rank was between 25 and 49, they sold a 1.5 standard deviation triangle. So that's a little bit wider out, about a 90% out of the money. This is about a 95%, this is 90%, and this is 84% out of the money. Okay, and these are how many occurrences it occurred. All right, and look what happened. Okay, here was the results. Look, if you did that 20, look at your win rate, 97%, 64 out of 6 occurrence, average return on capital is 1.95%. You made $21,350. Okay, when you combined it, when you combine the two. All right, and look at your biggest loss was only $4,560. So compared to if you just did a 1 standard deviation or this or this or this. Okay, so that's why I have that as well up so I know, you know, if I'm looking at something, which one I should sell. For you new people, I have this cut up and I have this pasted up on my thing as well. This will help you to know like ideally what to do. So for example, the green is what you want to do if you're bullish on the trade. The bear is what you want to do is if you're bearish on the trade. So what I mean is, look, debit means you're buying. Okay, we don't like to buy calls. We don't like to buy anything too much as a tape trader because you're spending money, and you have a lower probability of success usually. Okay, but it gives you the answer. What we like to do is we like to do a lot of the credit things. So we like to do credit put spreads and credit call spreads. Okay, so we do a lot of credit put spreads if you're bullish, meaning you're thinking the stock will go up. Okay, you want to do it when you have a high implied volatility percentile, which is high IB rank. You have a higher probability of success. You have a success. You have a lower return on capital. And here's an example: you sell a higher strike, or so you sell the first out of the money put, and you want to buy a lower strike, meaning you buy the second out of the money put, second strike out of the money. For example, if the stock is at $101, which strikes $5 apart, you want to sell the $100 strike, which means you're betting that the stock will stay above $100, and you want to buy the further out $95 strike. Okay, so that's just a credit put spread, and a credit call spread is just the opposite. You're betting it'll be below. For example, if the stock is at $101, okay, you want to sell the 105 strike because you're betting it'll stay below $105, and you're going to buy the further 110 out strike to limit your losses. Okay, so that's one thing really good about what I do on a daily basis, or what I look for, and those favorite slides go over, you know, all that. One thing that's great in Dole, what's been really going on is, or actually even in Tasty Trade, go to the show archives here. All right, and they've been doing this after the market closes, one of the last segments of the day. Scroll down to where it says hold on, I'm looking the webinar. This webinar is great because it walks you through Dole, okay, and you can browse all the webinar episodes down here, and you can look. It'll unbelievable the topics they have here. All right, on how to just everything. If you're really new, this is a great place to learn. In the archives of Tasty Trade there, or like I said yesterday, go to the Dole blog. Okay, go to help, and there's a bunch of videos as well. But for my stuff, that's why I pound on this golden gecko, because the golden gecko is, once you understand the golden gecko, you can do almost any trade. It's the backbone, and I think it's the benchmark. Meaning you can do all these other fancy trades, but statistically, the numbers have always shown that doing a golden gecko, which is selling the 1 standard deviation out of the money, put in strike or wider, and buying the 2 standard deviations, the wings, have proven time and time again to work. For example, if you go to show archives today and look at these last 2 market measures, in fact, I'm going to post them as well. Go to market measures and look at today's market measure and yesterday's market measure. all about how the wide golden geckos, which are basically strangles, have proven itself time and time again. So these two right here are excellent to look at. Okay. As far as tomorrow, I've got a few minutes left. As far as tomorrow, here's what I'm looking at. So what I do is I keep my charts on. Okay. Hold on. Whoops. Did I hit that by accident? Here we go. I keep my charts on the SPOOs, or the /ES, the futures. Okay. Let's see. Make sure it's right there. I'm gonna click on that. All right. I got a bunch of things open as I do this recording, so forgive me. Let's give it some time to load. There we go. All right. So, I don't know. I usually crash a little early, and I usually fall asleep watching, more market measure videos, or Karen the Super Trader. I'm always watching and learning. Um, but in the meantime, I always keep this open, so when I wake up around, well, depending where I am, if I'm in, if I'm in Hawaii, I'm usually waking up at about, oh, excuse me. If I'm in Hawaii, I'm usually waking up around 2 o'clock in the morning, because that's when our Tasty Trade Live starts. If I'm in the West Coast, then I'm usually waking up around 4ish, 4:30, right before it starts. And then I just kind of lounge around until the market opens, and then I just keep my charts open, because I'm looking for what I think is gonna happen. As you can see here, the ES is down a little bit, so. And I don't know what's happening with my charts. I'm sorry. Well, anyway, I'll just do this then. Let that load. Um, here's what I'm looking at for tomorrow morning. Here, let me just go to the grid. I live on this grid page. I love looking at a high option volume, because I know there's liquidity there. I have always had my filter on, and I usually 5100 is great. Is a great starting point, because I'm looking for ETFs that are. My first thing I do is I look for any ETF over 50. Okay, so I sort it by implied volatility. So again, EWZ looks good. Anything that says like iShares like that, I always look to see if I can do anything in those. Okay, and I love to do ETFs because I don't have to worry about earnings. So EWZ, I'm going to look at FXE, HYG, XLU, anything I can look at, anything over 35 cents, iShares, CTLT. That's what you should do. You should look at it and see what you can collect on. My VXS position just came off because it, for 50% of max profit. And this Friday, a bunch of my one of my golden geckos is gonna close for max profit on the SPY. And I was kind of holding off on cash because I wanted to have money set aside so I can really pour on some trades when IB rank pop in the SPY. So here's the ES finally loaded up here. So what I do is I kind of just zoom in, and I just kind of take a look at these. Okay. This continues. I can see IB. I want to take advantage of this, so I'm looking to put on a trade in the morning, because I want to take advantage if this vol collapse goes from 21 down to 13 again. Look at this, is ridiculous. Okay, so that's what I'm looking at on happening there. If you're wondering what these green arrows are, it's in the study I sent you folks. But and I'm gonna make this real clean. I'm gonna load a different study. I'm gonna load style up, and I'm gonna load. I'm just gonna do a 2-grid chart here. And I'll maximize this. This should be a cleaner chart, not as much stuff in it. And I'm basically, honestly, I'm just gonna look at the ES and just see what's going on for tomorrow morning and take advantage of that vol collapse. Alright, but basically that's all I'm looking out for. I want to look at these high rank ETFs and stocks and see what I can trade. Okay, for tomorrow morning, and if anything pops up, I'll let you know, or give me a shout out on the shout out box. Alright, hope that helps. Sorry, my computer's acting slow, so I'll just kind of end it for now. And like I said, if you need any help, let me know. I'll be glad to help. Alright, have a good one. Good night.